Welcome back. Finally, we've crossed that 8,400 mark. It's a psychologically important level, but we are in resistance zone. So let's see whether we can manage to sustain above these levels. For now, we're just celebrating that we've seen that level. It's just a gain of close to about 0.3% on the frontline indices. And generally, most of Asia is also fairly buoyant today, with the Chinese markets up nearly 1%. But right now, we're going to be in conversation with Mr. Ravi Uppal, the MD and CEO of JSPL. Good morning, sir, and thanks so much for joining in. Just last week, the government notified the hike in import duty on steel products. Though the hike now is still less than what the industry wanted, how much of a relief will it provide, for a company like yours? And now what is the difference between domestic steel prices as well as the landed imported steel prices?
Well, the decision of government to hike up the custom duty by 2.5% is indeed a step in the right direction, but I don't think that this protection is adequate. I think the Indian steel industry was expecting that we should get at least about the level of 15% custom duty right across all the products. The Chinese and the other competitors from international market have a huge advantage over us. It's not a level playing field. Keeping that in view, the Indian industry had requested the government to consider that duty across all items should be at least 15%. Although, if you really want to bring them on par, the duty should be in the range of about 25%. The Chinese producers get between 13 to 15% of incentive on all the alloy steels that they produce. Their freight rates are much lower, and interest rates are much lower. So if you add it up all together, so they have an advantage of about 25% over the Indian producers. Okay. We firmly believe that the Indian producers are very competitive, because if you look at our conversion costs, our conversion cost is comparable with the best in the world. So I think this is the request that we made. I also want to give you an example that if you have to export steel from any port in China, say to Bombay, it costs you today about $10 to $11 of ocean freight, and then you will end up in Bombay with your merchandise. But if we have to, dispatch any goods, say from Chhattisgarh or from Odisha to Bombay, it costs us in the range of $50 to $55 by way of rail freight. So where is the level playing field? I think keeping factors like this, the industry had requested the government to consider this on very objective and fair grounds.
Okay. Mr. Uppal, but you all will also be getting some advantage out of the falling iron ore prices, right?
Absolutely. I would say that the prices in the steel industry are getting completely redefined. I don't think we will ever go back to the levels that we had up to the second quarter of last year. Because at that point of time, the input costs were very different. Now, globally, the iron ore and coking coal, all the basic input material prices have gone down. So therefore, the new prices have to be with relation to the new cost levels. So this is something that we are absolutely alive to. But I think still, the price levels that we have in India, are much lower than what the industry can afford. This is because, we are competing against Chinese and Russian imports, where they are quoting at the variable cost. They're not trying to recover the full cost.
Mr. Uppal,
concept of marginal costing.
So how exactly is it hitting you? Are you working way below capacity? What's your capacity utilization in steel? And what is the margin loss if you have to compete with imported steel?
Instead of talking just about our company, let me talk about the pan-industry view. I think the Indian steel industry is today operating at a capacity of about 80%, and more and more capacity is getting added. Today, India's total steel capacity is about 110 million ton plus, and we are producing just about 84, 85 million tons of crude steel. So there is a lot of headroom for industry to have better utilization. My fear is that the industry had started some projects way back in 12, 13, 14, 15, and these all will sort of get commissioned in the time of next 1 or 2 years' time. So the capacity will gradually go up to 130 million tons. So you can understand the reason for my worry, that if the demand is not going up, and if we continue to have dumping by the foreign suppliers, the Indian industry is going to be put to real hard stress. Okay. And I don't think that kind of situation can last. I do agree that the demand will go up, especially when the government is talking about having the GDP grow by 7 to 8%. I would reckon that at least steel should grow as much, if not more. But who is going to take advantage of this demand? Is it we, or is it the exporting countries to India? So that is what remains to be seen, and we are saying that you give us a kind of protection by way of safeguard duty or anti-dumping duty, for which there's a very clear-cut case.
Okay.
Countries like United States, they decide on cases of anti-dumping within a fortnight.
Okay.
But in our country, we still take 6 months to 12 months to do that.
Okay.
Sir, since the beginning of this fiscal year, that since 1st of April, how much have steel prices come down by? How much has the raw material cost come down for, a company like JSPL? And therefore, what margin impact will it have since the beginning of this fiscal year?
Well, the steel prices started to come down in India from September last year. Until then, the prices were quite steady. And over the last, 9 months, I would say the prices have come down between 50 to 20%, depending which grade of steel that we're talking about. The costs haven't gone down that proportionally. Although I do concede that internationally the iron ore prices have come down, but the Indian producers, most of whom are hinterland producers, they don't get the benefit of importing the international iron ore price, iron ore. And therefore we have to depend on the domestic iron ore. I'm happy to acknowledge that in the last 3 months, a lot of mines have been opened up. The availability of iron ore is getting better, and the prices of iron ore are also getting, softer compared to what it was 6 months ago. But that is not good enough to compensate for the decline in prices, which is mainly caused due to unabated imports of steel.
Okay. What is the situation in the power space? How much of assured coal do you have from in-house mines, Mr. Uppal?
If you're talking about the power units of JSPL, we're running about 11 to 1200 megawatt, and this will be based on the coal that we're buying from the auction. And so, our intention is that we should be able to, go for a higher capacity utilization as that more and more coal becomes available. And this is also partly linked to the availability of the power purchase agreements. We're keenly looking forward to more and more inquiries for the power purchase agreements.
Okay. How much are you, have you already tied up for sales, and how much is available for sale in power?
Well, that we are right now having PPAs for about close to 1,000 megawatt.
Okay.
And we are hoping that in the next 6 months we should get more and more PPAs our way.
Okay.
But there are hardly any PPAs in the market, Mr. Uppal.
But there's some inquiries, but the decision still remains to be taken. But I really hope that the
we had a steel sector, we had a power sector discussion. I think it was Mr. Ashok Khurana who said over the last 2 years 30,000 megawatts have come in, but only 8,500 megawatts of PPAs have been signed. So are you really hopeful you will be able to get PPAs for the balance 200 megawatts of yours?
Well, there are some inquiries which are on the way, and but it's going to take a while before those inquiries get decided. But I think there's a lot of room for the state electricity boards to cover more PPAs, because large parts of the country still continue to suffer from power shortage. The ironic situation is that the electricity boards today are preferring to do the load shedding than to buy power for which they don't have money to pay. So I think distribution sector is one sector which really requires immediate attention and some kind of major reforms.
I was just looking at some reports on your financials. Actually, in the last quarter, your EBIT was lower than your interest cost by interest outflow by a goodish bit. Isn't this a worrisome situation? If I'm not mistaken, you were about 90 crore in terms of EBIT and about 770 crore in terms of interest outgo.
No, but that was just one particular quarter where the demand has suddenly sort of slumped and the prices have fallen, and we did not just wanted to drop our prices the way they were falling. So we tried to arrest the price levels, and but I think that was a one-time case. I think things will improve.
Okay, can you give us
how do you expect the situation in the current and the next quarter? I mean, it is still a 44,000 crore debt, isn't it? Total gross borrowings.
Well, yeah, it's about 42,000 crores, the debt which is there.
Okay.
And, there are multiple steps that we have taken to make sure that the debt progressively reduces. We have dramatically cut down our capital expenditure. We have put any new projects on the hold at this moment. And secondly, the focus that we are also looking at certain assets which are non-core assets. We are planning to sort of divest them in an appropriate way, and so I think in the next, and also we might consider going for IPO for some of our businesses, both at home or abroad, to mobilize more cash.
Can you just give us some timetable? I mean, which is the asset that you are putting on the block or looking for buyers, and by when should we hear from you on that? As well, which unit IPO and by when?
I won't be able to give you an exact time schedule for that, because it depends how the market is. Depending upon the market condition, we'll take the decision. And we have said it in the past that we have to go for a listing of our business in Oman at an appropriate time. We'll also look at IPO listing of our power business. So these are among few. And then of course there are some assets both at home and abroad, which we consider non-core assets. We will also be looking for divestment of those. Basically, idea is to create liquidity so that we can pay back some of the debt. We are very highly focused on the subject of reducing the debt.
Okay. No, it's just some clarity that I want on this, because it's a little worrisome that it is several times over your debt outflow compared to your interest outflow compared to your EBIT. I mean, is it something that you can correct in the third quarter, fourth quarter, second half? By when will your interest outgo be less than your EBIT?
Well, we know that already, in every quarter, which will follow now, I think, the EBITDA performance should get better. And, fourth quarter was, there were a lot of one-time items which we had booked in the last quarter. And, for example, we were hit by way of a mark-to-market loss in Australia, because the Australian dollar had depreciated against the US dollar, and there was a big hit on account of that. It's not because of any operational performance. There was some kind of financial items for which we had to make the adjustment in the last quarter. But those were, as I said, only one-time items, and you wouldn't see the recurrence of them again. So I definitely look forward to see a better performance in EBITDA in the quarters to follow.
All right, Mr. Uppal, we'll leave it at that. Thank you very much for joining us with your thoughts. So that's steel and power, both sectors a bit under pressure at this point in time. No buyers for either products. Steel facing severe import competition and flagging demand. Power definitely facing flagging demand from the distribution companies. We'll take a break on that note, but when we are back, we will tackle the IPO market. There is a new IPO on the